today's video, we're going to talk about Michael Burry selling 100% stake in this company. We're going to talk about 4 catalysts this week that could send stocks lower, and is the imminent breakout of the S&P 500 nothing more than a trap? So let's start off by talking about what Michael Burry is currently doing in this market. So as we come over, we look at that 13F filing. I want you guys to pay attention real quick. We look at what Michael Burry has sold, and I want you guys to pay close attention. Alibaba, he sold 25% stake. Shift Payments, stock 4, sold 100% of that stock. REAL, 100% of the stock. OLPX, and with earnings coming out this week, and Alibaba slated to come out on Thursday, with Alibaba having an expected move or plus or minus 8%. Is this a major warning out here for us? Because we come over and take a look at Alibaba stock real quick. Alibaba stock has been on one heck of a tear on the way up. Look at this off the monthly chart. It looks very constructive. So it has to be scratching my head. Why is Michael Burry selling Alibaba at a time like this? And it's not only Michael Burry that's also selling, but if we come over and look at Warren Buffett's Berkshire Hathaway real quick, we come right over here to closed out positions. Notice the S&P 500, Warren Buffett no longer holds any more of the S&P 500 at a time when it appears the S&P 500 is heading for a breakout, a run up to new all-time highs. However, this week, we have 4 negative catalysts out here for stocks. Now, the first potential negative catalyst we have out here for stocks this week is going to be the fact that this Friday will fall on the third Friday of the month, which means we have option expiration, aka there could be new positioning out here in the stock market. Then we come over and look at the 2-day performance after President's Day. I want you guys to pay very close attention. We look right down here at the S&P 500, and we can see the Tuesday after President's Day, we have been up 18 times, down 17. But then if we look at since 2018, the S&P has only been up 1 time and down 6. So we got to be very careful going into Tuesday, especially as the S&P 500 is getting ready for a breakout. Then we go over here and we look real quick at Wednesday, the second day after President's Day for the S&P 500. And going back the last 50 years, we've only been up 40% of the time. But then we look at since 2018, the S&P 500 has only been up 42.9% of the time. So let me know in the comment section down below, what do you guys think is going to occur out here next Tuesday? Do you think Tuesday is going to be a down day for the market? Do you think the S&P 500 is setting up nothing more than a major trap? Now, speaking of President's Day, will the stock market be open? And I got to tell you guys, if you trade the futures markets, yes, I plan to stream Monday. And again, we're going to see how much movement we get in the market. Maybe we hang out until the market closes at 1 p.m. Eastern time, or maybe we end up cutting it off early. But if you're a stock trader or a bond trader, we can see that the NYSE, the NASDAQ, and bond markets will all be closed on Monday. So there'll be no fun for you guys out there. However, the futures markets, we're in luck. The market's open at 6 p.m. Sunday night, and they'll be closing at 1 p.m. Eastern time on Monday. Now, let's look at another bearish stat out here for the S&P 500. And this is brought to us by Wayne, but I want you guys to look real quick. The top market right up there for the S&P 500. If we look between February 16th through February 28th, we have only been up 9 times, down 15 times, and essentially unchanged 26. Now, when we look at 1% moves, we can see 11 of them have been to the upside. 15 of them during that same time period have been to the downside. Then we look at 3% moves or more for the same time period. Only 2 of them have been up. Then we've had 5 3% moves to the downside. So we need to be very cautious. However, if we look right above that, February 28th through March 6th, we can see the stats then change drastically. We've been up 22 times, only down 10. Then we look at 1% moves. We've had 21% moves, only 10 down 1% moves. Then we look at 3% moves. We can see it's basically an even match, 4 up, 4 down. So we got to be very cautious going into this week. This is another bearish stat that we need to pay attention to for this week. Now, we come over and look at the 4th catalyst that we really got to be concerned with. Trump has had the ability to move the markets drastically already, and now he's detailing his reciprocal tariff plans, ask foreign countries to treat us fairly as he's about to deliver reciprocal tariffs. However, we need to be very mindful. We need to look for headlines this week, and not just this week, but moving forward, talking about tariffs. Again, this is going to be a problem. This is going to be something the stock market has to deal with moving forward for quite some time. Monday is going to be a bank holiday. We do have some FOMC members speaking, so maybe they'll give us a little bit of movement out here in the market. Then Australia has their rate statement Monday night. Then we come over and start looking at Tuesday. What do we got on deck? We have the Empire State Manufacturing Index starting at 8:30. We have more FOMC members speaking throughout the day. Trump is slated to speak tentatively. Then on Wednesday, we have the FOMC meeting minutes. Now, if you trade with prop firms like Take Profit Trader, be well aware any new news rules they may have in place. And right now, Take Profit Trader is having 50% sale off all their valuation accounts. So if you want a way to support the channel at no additional cost to yourself and make sure you always get the best deal, use the links in the description box down below to see the 4 prop firms that I'm currently trading with. Then we come out here and look at Thursday. Thursday, we have the weekly unemployment claims. We have the Philly Fed Manufacturing Index. We have crude oil inventory numbers. Then on Friday, we're going to have the Flash Manufacturing PMI, Flash Services PMI, 10 a.m. existing home sales, and revised consumer sentiment. Now, as we come over and look at the fear and greed index, this week we closed out the week slightly within fear, but a couple times throughout the week, we were able to go over to neutral territory. However, the most recent investor sentiment survey came in very bearish this week. 47.3. This is one of the most bearish readings we've seen in some time. And is that what we need for a big short squeeze to go ahead and push the S&P 500 up to making new all-time high? We come over and we start looking at the last week's performance. We can see technology by far was the best sector out there. And the big laggard out there last week was healthcare, followed by industrials. We look at the 1 month performance. Energy was a laggard, consumer defensives, communication services, technology kind of in the middle of the pack. Now, we come over and look at a chart real quick of technology. It's no wonder that it's looking very strong. And as we zoom this out a little bit, you can see it also appears like it's on the verge of making another new all-time high. However, this chart right here has me a little bit concerned. And this is a chart of the Russell 2000. And here's the question I keep asking myself. Is this nothing more than a bear flag? Or is this consolidation going to be constructive, which is going to try to push the Russell 2000 back up towards the 52-week highs? We can see right now the MACD indicator basically flatlined where it's at, not giving us a huge edge in the market. Then we jump over real quick. We look at the SPY versus HYG high yield bonds. Now this week, we did see high yield bonds actually starting to catch a bid, getting a little bit more strength as the S&P 500 is on the verge of a breakout. I got to go ahead and give that one check mark off for the bulls on that one. Then we look at the Dow Jones versus the transportation index on the bottom. Transportation index most certainly is still lagging at this moment. Then we come over and look at the 10-year versus the 2-year. We can see it's coming back down. If it goes back below this line right here, then the yield curve will essentially be inverted once again. Now, when we come over, we start looking at the volatility index. The VIX on Friday was down once again 2%. And we got to be very careful, right? This is an area. This is dangerous. Yes, when the VIX is lower, ranges normally contract in the markets. We get slow grind days on the way up. But also when the VIX is down here at these lower levels, this is quite often when we see volatility spikes in the market. And when the VIX spikes up, you know what that means for stocks? They go crashing lower. So that's the chart we want to keep on the radar. Also, take a look at the dollar index breaking down. We can see the MACD indicator still bearish cross. It now is below the 0 line. And we saw the dollar finally breaking below the swing point over here. Now, it wasn't only the dollar index suffering a little bit this week, but we also started to see the 10-year yield starting to roll back here just a bit. And Trump has been saying he wants the interest rates to go lower because higher rates is causing a problem with the U.S. servicing debt. Also, it'll help the real estate market, the automotive market, and also give consumers a little bit of relief with those high credit card rates. Now, as we look at the Dow Jones real quick, Dow Jones looks like it's on the verge of trying to break out of this triangle. Do we come back down early into next week? And then we finally break up and out. Dow Jones has been very close to making new all-time highs. However, just has not been able to in the recent weeks. Then we look at the S&P 500 closing out here on Friday, basically with a doji-ish looking candle. We see we have a wick on the top, wick on the bottom. But again, the more times we continue to hit on a particular level, the more likely that level is going to give way. Now, if we zoom this out a little bit, we can see we have this minor ABC pattern right here, which completes at about 616.26. Then we have a larger ABC pattern, which starts from this low right here. You pull it all the way up to here and we pull the retracement down, gives us a price projection at about 625.85. So again, we do have two upper level targets, but what I'm really worried about is this going to be nothing more than a trap? Do we start pushing above it? Then they rug pull it and we see stocks start cratering much lower. As we come over and start looking at the 4-hour chart, you can see the last two 4-hour candles, not very bullish. And also look at where the MACD indicator is. As we're back up towards what appears to be an imminent breakout, we're starting to have some MACD divergence, which also could lend to the case that could be nothing more than a trap when we get that pop through the highs. Then as we come over and start looking at the 30-minute profiles, notice we did start to get the MACD indicator finally starting to roll over on Friday, and Friday ended up being nothing more than a D as in dog shaped profile. Now, the good news is with a D-shaped profile, that means the next session is likely going to be a breakout or breakdown from this pattern. So let me know in the comment section down below. Do you guys think it's going to be a breakout to the upside or to the downside? Let me know in the comment section down below. I also want to remind you guys, I stream live each day the stock market is open. So if you want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Now, if we do start to pull back a little bit before we try to run up and take out all-time highs, let's go ahead and pull a Fibonacci retracement from this swing low from the last 3 days back. And notice the 38% retracement is all the way down here at about 606.26. Well, we know the S&P 500 loves to retrace the 50% level, which then comes in at about 604.77. Then as we jump over, we start looking at the futures markets real quick. We do have a high volume node right below us, but we also have this whole minus development area within the composite profile. And if we look left, we also have this minus development area on the weekly profile. And this week we did close above value area high, which comes in on the weekly at 6112.50. The weekly point of control is going to be 6088.00 with value area low coming in at 6049.50. So this week or next week, highly probable we at minimum will retest value area high. Then if we start breaking below that, I then want to turn my attentions towards that point of control, and we'll see if we just dip down and then rip right back up. Now, if we were to pull a fib retracement of this last leg up, notice that that point of control comes in very close near the 61.8 Fibonacci level. And if we pull a fib from the entire low leg down here, all the way up towards the high, that 50% level would then come in just below that point of control at 6,088. Now, as we jump over and we start looking at the daily profiles, here's what we've been talking about on the live stream. We're talking about this on Friday. Do we hit 6148.50, which is an untested point of control, or do we come all the way down to 6103.75? Which of those levels are going to be hit first? Now, notice we had a D as in dog shaped profile. Normally, I say we would expect a breakout or breakdown from this pattern, but with Monday being President's Day, that could be put on hold going into Tuesday. And if we do start to break lower, notice what we have over here on the profile. We do have this minus development area over here. We also have an untested value area high from Thursday at 6113.25, which the rule behind that said either Friday or Monday. In this case, I'm going to extend it till Tuesday, since Tuesday's the first full trading session, that we come back and we retest that level. And when we break that level, highly probable we're going to retest 6103.75. The real question I'm asking myself is, do we break up first, set the trap, and then rotate lower? Keep in mind, normally with a D-shaped profile, whichever way we break first ends up being nothing more than a trap, and they run it back the other way. Now, as you look at the daily profile, 6140 will be value area high. The point of control is going to be 6135.00, and value area low will come in at 6131.50. So if we do start breaking above value area high, I want to target that 6148.5. Or if we break value area low and we start coming back up, we can target each of those volume profile levels with a goal in mind up here towards 6148. If we break value area low and we stay below it, then I want to turn my attention towards that untested value area high and that untested point of control. Now, as we come over, look at the QQQs real quick, look at the weekly chart, right? Weekly chart on the QQQs closing near the high of the session. If you look at the previous all-time high, 538.28, and this week we saw the Qs hitting 538.84. So the Qs this week making another new all-time high. Then as we come over, look at the daily chart real quick, notice that last candle. No, we did not close at the very tippy top. However, we did close in the upper third of the range, And we have this larger A to B equals C to D pattern, which actually completes up here about 543.93. This is something we've been talking about extensively during the live streams as well. 4-hour chart, we see that MACD indicator trying to cross on the way up, but now we've had 1, 2, 3, 4, 5, 6 consecutive up candles in a row. So I won't be surprised if maybe we push a little bit higher, then come back to retest the swing point here, and then we'll see if we continue to go up higher. On the 30-minute chart, MACD indicator is starting to look a little bit weak, which could indicate that we're going to form a little consolidation or maybe start to pull back in the short term. Now, we come over and look at the futures markets real quick. We got to zoom this back here just a bit. Right up here at 22,301, we have an untested point of control above us. And notice this week, we closed outside of value area high coming in at 22,008.50. The point of control is going to be way down here at 21,790.50 and value area low be 21,654.00. Now, just like we talked about with the S&P 500, anytime we close outside of value, then I expect within the next 1 to 2 sessions, in this case, if we're dealing with a weekly profile, one session would be a week in time. So I expect that either this following week or the week after, we come back and test 22,008.50. Now, the futures market is slightly different than the stock market. And what I mean by that, if you look at the Qs, they made new all-time highs. When we look at the futures markets, we are well away from all-time highs out here. So that's just something to pay close attention to. Also, we're kind of in this minus development area, so we can see the NASDAQ kind of spend a little bit of time in this area. And again, I'd love to see that untested value area high to come back and get tested. We come out here and look at the daily profiles. Notice last Thursday, we left an untested point of control behind at 22,033.5. We tried to come down and test it right here. However, we missed it by a few points. And again, for me, that's not a valid test. We also have an untested point of control down here at 21,958.50. This is going to be 2 consecutive point of controls that have not been tested. And what I mean by this is on Friday, we have an untested point of control at 22,130.25. So when we open up Sunday night, highly probable we're going to have 2 untested point of controls below us. And on Friday, we also closed outside of value area high. So this is going to be 2 consecutive closes outside of value, which is also going to increase the probabilities that this target will be hit. 22,170.75 will be value area high. That point of control is going to be 22,130.25 with value area low coming in at 22,099.25. Now, with a holiday, this could be a little dicey, all right? Do we maybe go up Sunday, even into Monday, and then Tuesday, like I shared with you guys that bearish stat earlier in the video, we have a negative reaction, and on Tuesday, that's where we come up and maybe try to clean up some of these levels that we have left behind just a little bit lower. Now, if you guys want to learn about the different drawdowns that Take Profit Trader has and how to overcome the intraday trailing drawdown, then make sure to watch this next video right here.